The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 21st of January. Dow's at 367. Yesterday it was down 700-something points. This is going to be good. What happens if we give back? What happens if we go above yesterday's high, which was at 49,005.01? Does that just negate everything? Does that mean it's all over? Well, as far as I'm concerned, it's still part of a digestive phase because that weekly chart is still very strong. And if you listen, look, how about this? Let's put this chart up here. I'm going to make this technical Friday, even though it's Wednesday. Have a look at this beautiful up channel. I never mess around with an up channel like this because it's in perpetual motion. It just continues in the narrow rectangle. In this case, it doesn't even go down except once it goes down to the trend line at the bottom of the up channel, but it doesn't even break. Look, the green 9-period moving average, let me get the pointer. That weekly chart, look at that. Barely, it uses the 9-period. I always call this walking the 9-period moving average. And many of the Chapman waivers know very well when I say walking the 9 EMA. And then it uses the 14 as a propellant zone, like a trampoline, goes down, vroom, and whooshes up. But the moment the Dow starts to break the 14-period moving average of 48,024, let's call it 48,000, that's a bit of a change, just a bit of a change. If it takes out the trend line, it's a rising trend line, so let's just make it 47,500. Takes that out, now we have something very different. Now look at this. If I had to, I've always wanted to do this. It's just a waste. I always find it's a waste of time because it's more a curiosity, and I'm going to spend time on it. But imagine all the news. Imagine this whole Greenland news right there. Can you see? Does that show in the chart? Does it say, "Oh my God, Greenland, look at that sharp sell-off"? It doesn't say a thing. It says, "What? Well, what are you talking about? There's nothing." So just remember. If you want to if you want to jump out the window, listen to the news, especially ABC, CNN, whatever it is, because when it comes to economic news, if it's not, even if there's a whiff of something not good, they will just lambast whatever it is and make it the biggest thing in the world. Well, the chart says ho hum. Nothing to see here, right? So let's just get that out the way. Technical Friday on a Wednesday. It says that the chart at this moment, it could change by Friday, but at this very moment, it's saying, what are you talking about? Now, I had promised that I would look at gold in a little bit greater detail, Chapman wave methodology. We'll get to that in a moment. However, let me just finish this up. It is not good that the 9-period moving average is coming down in the same direction as the black 14-period moving average. So price has to change, and it's still very positive that the 9 is above the 14. The MACD is very weak. The stochastic is at 70%. It's 80% or higher is what I like. 70 is okay. On balance, volume is sliding. The relative strength, this gray line in the daily chart, is weakening. The weekly chart is still really good. 91% in the stochastic. So I'm going to give you kind of a foretaste of what I'm looking at in terms of what would be very negative and what is doing okay so far. All right, so now let's go to the S&P. And I want to do this not just for you. I want to do it for myself because I, too, am a little vulnerable at certain points to say, and because of the news. I mean, let's face it. The thing with Greenland, it's discussed because it's Trump. It's discussed in a very ferocious manner. I mean, he just says things, he thinks it through, but when it comes out of his mouth, it comes up in a very quick summation of something, and that the media picks up and it gets aggravated over time. Now, what I'm looking at here is if the S&P has arched over and the 9-period moving average has turned negative, it says, hey, you've got a technique, and the technique says you're in a sell signal. Another bar or two underneath the 14-period moving average over here becomes a sell mode in the daily. The weekly chart is just arching over. It's not doing very much. It's at a peak C if there's no new high. Nothing to see here. The technicals with the 9-period moving average way above the 14 is a good sign. The MACD has turned down. The relative strength index is weakening. The stochastics at 88%. That's great. And the on-balance volumes pull back. Monthly chart, I don't even want to discuss that because daily leads to the weekly leads to the monthly, so we have to worry about these first. QQQ. What happens if today or tomorrow we go above the high of yesterday, which is 68.71.17? That's a good sign, but that's all it is. It's a good sign in the daily chart. It doesn't make up for this very big gap to the downside with a horrible red candle. It's going to take quite a bit to change that. QQQ, NDX 100. Had almost a Chapman wave red Roman candle, inverse Roman candle, and the level of 612.71, if it's able to hold above that for 60 minutes, that'll be a good sign of the day to say, hey, you know what? We could actually rally within one more session towards the high of 615.06. It's close to doing that. We're at 612.56 right now. I'm watching that closely. But the weekly says, no matter what you're thinking, this is a rectangle within a rectangle. And that just says you've got not just one, but two levels that you can monitor. And there it is, the outside track. So the one is under 600 is negative, and over 6, let's just do this one right here, where that's the high. Over 630 is positive. Make it as simple as possible. And right now, it's just sideways, right? That's the QQQ. IWM, that's different. Look at this. IWM. Look at this weekly chart. What's fantastic about this is if by next week, not this week, next week, if there's no new high above 267.22 this week, and we've got 2.5 days to go, looks to me like they're going to try to get to 267.23. But if there isn't, the next week confirms absolutely clearly that we're in a brand new leg C. If that becomes the new high, if there's no new high this week, because there's never an H after a G in the Chapman wave methodology. And that says the Russell 2000 ETF, the small caps, with the IWM, with maybe let's have a look at KRE, which is there you are. Look at that, a new recovery high, 69.14 in the KRE, the S&P Regional Banking ETF. Man, that is important. So you see what I'm talking about when I discuss rotation in the market. This is so important because the Russell now is leading the S&P. The 2000, very weak for 2 years now, is leading the S&P. The XLF, look at this, the XLF takes a tumble after making an all-time high at about 56.50, trading right now at 53.65, while the regional banks are leading. Wow, I waited a year to see that. I'll be back in a moment. Now it's at 346.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I was looking at that. I'll come back to it. I said I'd come back to it. Yesterday we were looking at the very low price stock, and I said I'd come back to it, and now I can't remember. I forgot to write it down. Darn. All right, so a question came in. What about SoFi? I'm going to get back to the golden moment. I just want to treat what is coming up right now. Is this a kind of a bottom in SoFi, that SoFi Technologies, online banking, financial solutions, student loans, etc.? Well, look at the low that was made right here. Not the one that was made back in November at 23.52, but the one that was made back in, I think it was December the 17th at 25.17. Yesterday's low was 25.21. Today's low is 25.25. So I'm going to suggest this. I don't like this arching over in the rectangle. I don't like this when it arches over in the pattern that I call the lowercase h that goes to a lowercase m. But when you get a retest and the stochastic's way down 11%, the on-balance volume is just about to attempt to turn up, and the MACD is expanding on the downside. 9-period moving average is very weak. All I can say is the best way to deal with something like this, and I think it's early, but at the same time, it's suggesting that the 25s with the potential, 23.50, so that's a point. Let's call it 2 points just for argument's sake. So with a 2-point stop and a $25. All right, I'm going to make this suggestion. If this is something that you've monitored and it's on your agenda as something that you'd like to get, and I've discussed this for a long time, we did attempt it once, but it didn't work, so I just left it alone, that Bank of America, which is the choice that I was making, that we've still got a little bit left right from our buy way down the 29 area, back in, that was in at the October low of 2023. You see, the Bank of America has broken this trend line, but the 9 is still above the 14, and it is in a leg D in the monthly, and it is a peak D in the weekly, and a peak E at 57.55 in the daily. And the reason I'm mentioning this is I just spoke about the XLF, and the Bank of America is part of the XLF. XLF turns down very sharply, and the KRE, and I have no idea whether SoFi is in the KRE. That's the S&P Regional Banking ETF, is at a recovery high, not an all-time high. That's way up at 78.81, but this is still darn good because it's a multi-year high coming up. If we can get through 70.24, and it's very close. Today's high 69.41. So I'm putting them in the same. Okay, this is what I'm going to suggest. That SoFi, in the relationship that we're looking at, is suggesting to me that it might take a little while to get to the 2780, 2810 area, and that's going to be important. Once it gets there, it's gone back from the H pattern into a rising 9-period moving average above the 14 in the weekly chart. That'll help the other technicals improve. So this is what I'm going to say. Just put your foot in the door at 2586. This is one of those where, at least on a very short-term basis, I would add to it as a let's just say you got 2584. Days young, anything can happen. Markets suddenly start to pull back. Next thing you know, it's at 2552. But what if the exact opposite happens? It's 2582 right now. The high is already 26.05. It goes to 2610. So you've got yourself an initial position right here at 2584, just small little position. But if it goes to a higher high today than already today's high, then I would add another very small trading position, and I'd try to keep this one as a core. And this one that you've got is just say, take me where you, que sera, sera. Just wherever you go, I'll follow you. Because that 9-period moving average it will take a long time to go green. So it's just like a starter position. And in fact, I'd even make a starter position. I wouldn't even add. I'd wait for at least a really good 2 green candles, and then I'd say, that's different. All right? But I think it's still a little early for SoFi. All right, cool. That took a long while. Next question came in. I'm a little embarrassed to even talk about it, but, you have to talk about the good and the bad. Yesterday, we took an 84% profit in a small position from one of those that we've had for a long time, well, quite a while. Actually, for a month. And so let's just do this. ONDS. So we got stopped out of this position right here. We got in, plop, it took us out, and look what it's done. It's up 53 cents today at 13.75. This is Ondas Holdings. Let me just take this away here, just make this small. I like to keep them on the chart to show you where I went right, where I was wrong. Let's make it change the color just so it doesn't interfere with our discussion. There it is. Okay. So what we're looking at here is it's trying to go to a leg C. Now, I have no problem, regardless of any tax consequences or anything, if there's a small loss and I want to get in, I'm believing that loss will be more than made up, that you can't take for tax purposes, that is, because you got in again in a shorter period than you should. But I'm looking at the Ondas Holdings, private wireless data and autonomous drone solutions for industrial and government use. I think this is good action right now. It wasn't, and it went deeper than it should, but something is correct. So it's unfortunate. I mean, we were in the 12.50 area. Darn, it's a pity now. It's at 13.79. But if it holds well, I might consider re-entering for subscribers. Now, what's really important about this is that it's in an area that has held so well. As I say, those 7 sessions of the pullback, 6 sessions, that was too much from a peak B. But I'm still keeping that as a peak B. No alternate counts, a peak B. And I'm anticipating they'll get to a C. So the question was, I held on. I did not take the stop. It's looking good. I'm saying just hold on. We might have to join you. It's unfortunate. What can I say? I have tight stops because when we have it and it works, it just way more than makes up any small losses. All I can say is, congratulations for holding. And now what I'm looking at is, if I'm correct, I can do a left side, right side price. Isn't it funny? In those thousands of charts I'm always looking at, I have not seen a Chapman wave, stork leg formation it's a particular characteristic of the market at a certain point that says, right there. So I'm anticipating that if Ondas actually keeps, didn't mean to do that. That's the one that I missed. Oh, that was a pity. I just can't have a wide stop. Look what happened. Look, what if it kept going down here instead of that big turnaround? You'd be at 11 something other. A 10% loss. We can make up small losses, but that's a little too big. The responsibility is too great. So I'm going to go from that low right here to there. And I'm saying, this is a little bit done too quickly. I should take a little more time, but I don't. I've got so many questions coming up. So I'm just going to say, if Ondas is able to, in the next 2 days, to close above 14.52, then the high of 15.28 that was made on the 12th of January, that should be hit next week. All right? But if it slips and it suddenly comes back and it's at 13.26 in the next day or two, that says, stalling motion. I'll be back in a moment. Dow's at 361. Good. And the S&P is at 52. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So ABEV, ABEV, Ambev's SA beer carbonated drinks we were looking at yesterday. I had a question about it, and I said I really do like it. I'll do a little bit more work tomorrow because we're running out of time. Look at this left side, right side price time match. Not to the exact low right there, but to this peak right here. That should be pink. And what am I looking at? I'm looking at, so let's go with it, Chapman Wave inside wedge green dashed target repellent line right there. Wow, isn't that nice, huh? So there you are. Do I like it? Yes, I do like it. Would I buy it right here? Oh, wow, that's a tough one. So this is beer and carbonated drinks. If I'm correct, I hope I'm correct. I did it very quickly to check it. If it goes to $2.63, and today's high is 2.63 cents, that parallels the left side high of the week of the 5th of December. If it goes to $2.64, that becomes a leg C and is starting to push away from the weekly 200-period exponential moving average. The monthly chart is already green, so all the technicals are green in the 914s. The MACDs are all strong. I like this. I like this very much. And so I was talking with someone recently. They're very upset. They're in the wine business, and wine is just not the popular drink anymore like it used to be, number one. Secondly, the whole thing with Canada has been impacted, but that wasn't the issue. The issue was the price of the bottles had gone up so much. So it's interesting. So beer's in a can, so that helps Alcoa if it's made in America. I think this is Sao Paulo, so let's see what happens there. There's Alcoa, nice bounce today. We're still long Alcoa. And now ABEV. Yeah, I like it very much. Now, the big question is, would I buy it here at 262 and fuss? Or would I just say, all the technicals are good. The worst case is they get stuck, glued to the 258 level where the 200-period moving average is, and pulls back and then comes back. Having hit this so many times, the way I look at it, the only next thing is to break sharply above, because all of this has been building while it's gone to the 200-period moving average. The MACD's been expanding. The retro strength has improved. The 914 is very strong. The stochastic is at 82%, and the on-balance volume has a huge way to go before it gets overbought. So I'm just going to say I like it, and in your trading, I would say this is great as a position to put in place, and then just do nothing, and then just wait, and the next thing you know, it'll be into this candle right here, the Chapman Wave inverted Roman candle with a high of 272. If it takes that out, then the whole structure says now I can start doing a left side, right side price time match to say that by sometime in February, there should be a hit of 282 to 320. That's the way I'd look at it. The only thing that would change that, if it breaks 256 in the near term, meaning by next week, if it closes under 253, that says, sideways action. So I like it very much. And I'm just saying I would get in and I wouldn't fuss. I'd get in and I say I like it. It looks from the way it gapped down in the weekly chart and then rallied that it just doesn't want to be down. It's like a cork in water. It just doesn't want to be down in the 240s. That's the way I'm looking at it. So yes, it's short term. It's just got to the left side high of 260, 263 from the 2nd of December. That's where you can expect a little bit of resistance. I do like it. Okay, here we go. Now let's go to the gold. No, just let me finish with the TLT. TLT is down at the bottom, up 23 cents at 86. The TBT is up at the top. It broke to a new high, but it didn't take out the starting point. So this could be an alternate count. ABCD, this could be an E, could be an E/A. All right. So far yields and as a leg C in the weekly chart. All right. Enough of that. Now let me explain what I'm looking at in the gold. So we've just kept our physical gold position, PHYS, just kept it. We've taken quite a bit off, and we've just kept a small core position. Same thing with our CDE core mining. Silly, we could have added to it just very easy. Now the question is, what happens next? So I'm not going to use the core mining, although 2361 was the high on the left side back in October, and the recent high was 1250. Oh, why did I put 12? It's 2355. That was dumb. 2355. Right. So as I see it right now, there's a double top in place there, but that's not the issue. You got to go to silver. So let's go to silver right now. What did I type? Where did I type? I typed it on the chart. And I have to add quickly, because it's so important. Look at this. This is the Dow. I'm watching it right now, coming back so strongly. Look at that. We've almost taken out yesterday's high. We're up 498. The high is 49.03. 003. I think we've got 3 points to go, right? 49. 005.01. We're almost there. We're almost filling that big candle, and we're going to the upside. Very nice. I like. That's why I didn't want to go short. Let's go on. We want to be looking at silver. So this is what I'm interested in. The 9-period moving average, the price is way above the 9. The 9 is way above the 14. The MACD is still, no, it stopped expanding, but it's still, it's very, that the differential between the green 9-period moving average, 9-period differential, and the red, this is a 26-period exponential moving average, is still very wide. And the stochastics at 88%. So let me just say, what could do it? You've still got the whole Greenland thing, and so it's sitting there. It'll come back again. You know, Trump, he's like a pit bull. When he gets something, he just latches on, and that's the way he latches on until he gets his 1% victory. So that's all he needs, 51% or 50.01, and he feels that's a victory. So any compromise that leans towards the thinking of Trump, and there is absolutely a cogent message out there. There are minerals. There's 50,000 something people there. It is very strategically important to the United States. The big question for a lot of people is, hey, what are we threatening a little baby kid? It's like a little pinprick in terms of the whole economic structure of the United States. But it is strategically important, and that's really the point he's trying to make, I think. So let's just do this. So silver, what could bring silver down, and why would it be important to see certain things taken out? We've got a break coming up. The Dow's up 476. The S&P's up 68. This is an important moment because, yes, now we can look at this and say, that's parabolic. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me do this. I'll follow it up again tomorrow, but let me just say that in the silver and gold, and look at gold, look at this. Where did I type that? Silver and gold, there it is. In the gold, as I see it right now, if there's a calming moment, just in terms of the discussion of Greenland and all that, that's one thing. But as I see it, I think it's going to be the futures. It's going to be the it's the squeeze that's put on when the commitment to the borrowing of the shares or whatever it is, that anything that has to do with the stopping the amount of money being put in to buy, that's going to be most important. So the leverage is really the issue. So if all of a sudden there's a much higher premium to be able to borrow the shares or to trade the futures, that's what's going to do it. Because geopolitically, I don't really see anything here that's just going to take it down. So the green 9-period moving average goes under the 14-period moving average. You'd have to be in gold. You'd have to be down at 44.80, and you're at 48.35. So it's going to be a process. And what I'm really looking at here is that I think over a period of, unless there's a very sharp move, and that impacts a sharp move down, and we take our look today's low. In one day, we've got a low of 47.61 and a high of 48.91. That alone, go back. That was like, go back to any of the periods like November, December. You didn't even have a couple of days of trading with that kind of range. Now you're doing it in a day. So we're excessive. There's going to be something. And I think it's going to have to be with how the futures are organized, what happens with the leverage, and I think that's the only thing right now that's going to do it. So I can see that there could be a sideways move. Gold is not as parabolic as silver, but either way, it's a sideways move that goes kind of within a range, like that rectangle formation, and it goes on for a little while, and then it takes out the bottom of the rectangle. So it's going to take time, and the stochastic at 93%, I mean, there's nothing here that says, except the on-balance volume is overbought. Other than that, there's nothing here that says, oh my God, go short. But what it does say is, at this particular point, you've got to be ready for a pullback, and that pullback only starts if gold goes under 4,700. And right now it's at 48.40. So don't get too carried away. Not only that, anyone who's been shorting these two instruments, probably is now looking at a portfolio that has gone a lot lower. All right. So I can't say to you, is it going to sell off right now? I can say that it's overbought. Big deal. Overbought can stay overbought for a lot longer than you can remain solvent. So look at this, 93. I've got this as an F/C. There could be a D tomorrow, just one pick pop to the upside. I'm suspecting that over the next week, there's a really good chance that silver could test. It's at 92.93. I'm suggesting that silver could test this low that was made just 3 days ago of 86.57. That's over a week. No matter what happens on the upside, that's the way I'm looking at it, as an arching formation. And gold over the next week, let's say Wednesday a week, I think that we could be testing yesterday's low. That sounds like, yesterday's low. That's a lot of points. Yesterday's low was 46.22. So that means that as I'm looking at it right now, it's extended just on a purely technical basis. There's no reason other than to say on a technical basis it's a little overbought, so some selling could come in. That acceleration to the downside will really pick up if we start to close under 4,600. It's speed that's needed. Otherwise, sideways action. Sim, the question came in, symbolic. Yeah, it's been a problem for us. We've tried to get in, and we've lost a little bit, and we've had huge profits in it, and now it's becoming a lot more. I like to keep that there. So let me just make it smaller, change the color, just keep it there so that you know exactly what we've done over a period of time. But we've had this right there. So just to show you, look, in the big picture, that peak D should have held, and we should be back at about 72. This is not good, but symbolic, which is the AI, this is a robotics for Walmart in their warehouses. I think this is still a really good stock going. I mean, we've had this before. We've had this from the 48s. It's gone to the 84s and it's come down. We've made a lot of money on it, but then we've tried to come in lately, and that's just it worked going to D. But now I think it's a little stuck. So have patience. It'll be back on the line. But I just think right now I'm going to step aside from this. Next question. Let me just check it out. I hope I'm going in order. Was Ulta Beauty. Remember, we nailed this years ago where it made, I haven't got all the notation. What a pity. Remember, we were looking at Ulta, and what was the other one? Oh, there were three. Ulta, Odd was the other one. That was the competition. This company, a young company, came in. They did really well, and then it started to pull back. And there was another one. Ulta, three letters, EKXEXK. Why am I forgetting it right now? Anyway, Ulta Beauty looking very good, all-time high as we speak. You remember I've spoken about this for a long time. I said, if the beauty products company starts to fail, that's really that's a recession, because these are the things that people give up. They don't give them up. I love the stock. It was off my list. I haven't looked at it for a while. Look at this peak A, B, C, D, in leg E at 692, up 17 today. It looks fabulous. Now, you could say parabolic. No, not yet, but it is very strong. This is peak A, peak B, peak C. Leg C in the weekly chart looks great. I don't want to do the notation just yet. 666 is key support, the 9-period moving average, near term, and shorter term 655, but it's looking really good. I'll do the notation and I'll come back to it maybe tomorrow. Next question came in. CRML. I've liked the stock a lot, but we haven't actually got into it. CRML is Critical Metals Corporation, mine development company, lithium, rare earths for supply chains. It had a really strong move to the upside. It went to a peak C, and it's pulling back. It's down $1.32 today, 15.83. This particular right arm extension on the right, this is something to monitor very closely, because it shouldn't be down as much as it is today, down 7.5%. I'm going to watch this closely. It's one that's on my list as a potential buy, rare earths. But at the same time, let me just say that there's a lot going on with this pullback today. I think it should still try to go to 20 over a period of a week or two. But if it breaks at under 1583 right now, if it breaks under 1428 in the next day or so, I'm just saying step aside. It's not yet ready. Something's going on. It should not have pulled back as sharply as it did today, but technically it should try for a leg deep. So yes, if you're in it, I'd say just be a little careful.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So real quickly, LIC is Lithium America trading at 588. It's up 9 cents. Yes, I like it. It has this little congealing, this little cluster pattern right here. It needs to get to 620 very quickly. I would not like to see it break under 559. It's at 587 right now. That'll just stall it. But it is slowly improving. It's pushing away from the 200-period moving average in the weekly. Just have patience with this. I wouldn't get too carried away. I'd love to see it at the 620s. Then I think it starts to pick up upside action. So Procter & Gamble. So this is something I've monitored for a long time. I've said that the monthly chart is just horrible. It did test the low of 2023, but at 138.14 level, it's really trying its best to break out, but it's struggling. So I'm just going to say, as a dividend play, and I don't consider a stock good for a dividend unless it's got capital gains. What's the point of the dividend if you're going to lose 15% of your capital No dividend is going to make that up. So we haven't got into it yet. I have said to subscribers, this is maybe one of the few longer-term plays we'll put in place, but I just don't think it's quite ready for the big move yet. Let's look at the game. Today's Wednesday, maybe Friday. Let's see if we can get to 148. Then it's going to improve. So with that said, as I say, we became a little bit cautious. We've started to add some. Some of them would have been great if we were able to hold on, but I have tight stops. They got stopped out and then they moved higher. That's okay. I don't mind getting back in if they were holding well, because they'll more than make up the little bit of a loss. So with that said, CVS, just as we go to the break, CVS is one that we've got. This is like Procter & Gamble, except this is successful so far. I'm thinking this is going to try to work its way towards its 81 right now. If it's able to get to 82.5, then I can start to say, hey, maybe it's going to get to the 85.15 previous high that was made back in October. But this is a more longer-term play. CVS Health, CVS is the symbol. Hey, have a great day. I'll be back tomorrow, and check out my Opening Call Daily newsletter, and stay tuned for Steve Rhodes and all the great programming. See you tomorrow.